all of our tools members, partners, mastery students who have access to our tools. And I thought, you know what? I can't stop. Can't stop, won't stop. So talk to me. Give me some comments and questions on your feelings of what's going on. You can put them in the Q, the Q box, the question and answer box, and let's talk about what's going on today. While you're doing that, I need to let you guys know a couple of things, and then I'm going to share with you what happened to me over the weekend. You guys, well, Jay, I know you see my face, right?
I do.
All right, do you see the screen too?
I do.
What is it, like a 50-50? I mean, I don't see what you see.
You're on the right. As I'm looking at you, you're on my right-hand side from the middle to the right, and then the screen's from the middle to the left.
Can you click and drag my window and make it smaller and make the presentation bigger?
Yes.
Okay, perfect.
So I can leave this up. Click and drag, but there's a bottom right corner kind of diagonal arrow on the top right and bottom left that I can click on, and I put the optionetics on the top panel, and then you with your screen on the bottom 2/3.
Awesome. Okay. All right. So let's go ahead and get started. Obviously, I'm going to be taking questions and comments during this hour-plus session. Let me look at something real quick because I got a trade that's going on. I want to make sure you guys, yeah, we're still good. I want to make sure that I show you what I'm doing with this market, because there's very few things you can trade right now because just the inefficiencies are terrible. But I do want to show you how to do that. Okay, so disclaimers on the screen. We'll get the recording out to you as soon as possible. We got a disclaimer screen. Two things on the disclaimer. First of all, stock and options trading has large potential rewards, but also large potential risk. Second thing I want to tell you is that myself, Jay, everyone associated with Tom's Trading Room, Optionetics, or likewise, we're here as educators. We show you how we trade, all right? And of course, we're not investment advisors. We don't give specific trading advice. Everything I'm going to talk about is in US dollars today unless noted otherwise. All right, so you guys see the screen. Let me just kind of move forward here and give you an idea of what I want to talk about. We're going to go through a market update. We're going to go through flash patterns. We're going to talk about when not to trade. We're also going to talk about these markets. And these markets are just coming into the day. All right. Coming into the day, we've got markets that hit the 7% limit. So let me back up and kind of share with you a moment my weekend. So if you have not done this yet, you need to do this. You need to go to this website. All right. It's IG.com. And if you go to IG.com, they've got some different things you can look at during the weekend. One of them is called Weekend Wall Street. All right. It allows you to see what's called CFDs, contracts for difference, that trade based on the closing price of the Dow Jones Industrial Average at 4 o'clock. All right. What they do is they then take bets on opposing sides as where this is going to open at on Monday. And this moves around Saturday and Sunday. Well, Saturday was down about 300-400 points. Remember, Friday we had that big run up. It pulled back on the Weekend Wall Street. By Sunday, it was down 1,000. It was down 1,000, 1,100, 1,200 points. Then at 5 o'clock, so I'm hanging out with the family. I'm on the beanbag, and we're watching. I got Bloomberg on because CNBC doesn't do anything on the weekends, on Sunday afternoon. Bloomberg's got Asia going on. There's a CNBC World, but it's actually, don't think it's as good as Bloomberg. So I'm looking at Bloomberg. It has all the stuff dropping down on the right-hand side, and of course, everything's on the left-hand side. Then I see a red thing pops up around 5, where the Fed just reduced rates to 0. I thought, is that right? Then I looked at this at Wall Street, and we went from down 1,300 down to like 200. So it popped back immediately, down 150, 200, 150, 200, and it was doing that for about 15 minutes. Then it started dropping again. Now this is about 5:30. We're looking at it, and all of a sudden it's down 5, 6, 7, 8, 9, 1,000 points down again as we're close to 6 o'clock. So I'm thinking to myself, Futures markets open at 6 o'clock. I'm going to sell something before we go limit down. Now at night, limit down is somewhere near 5%. We were opening already down 3.5 or so. I went ahead and when we opened, it was like this. It was just like what we saw at 9:45. So I looked and I looked at the top line and I thought, okay, I'm not going to get that, but let me go somewhere halfway because I don't just want to sell at the market. I'm going to get a lousy fill. And so I sold and we drop, and we hit limit. And it's funny, my son said, we're not going any lower. And I said, yeah, we're not going any lower, but if they don't come off of this, it's going to, then there's a bunch of sellers that want to get in, and they're not going to get in until we release the lock, which means that once their lock's released, we will go lower. And he figured it out very quickly. So I rode that last night into this morning, and we opened down, and then we locked again at 7%. And then I stayed. In fact, I'm still short. All right, I'm still short, came all the way up. I had a buy stop right back where I sold last night, just in case, you know, last thing I want to do is have a profit turn into a loss. So I had the buy stop. Well, we almost hit it, but we've come back since, and we've started dropping again. Right. So the thing I want to tell you is that weekend Wall Street is a great place to go to find out what's going on in between those two particular days. Now, where are we? We're coming down. I'm going to talk about this in a moment, but I've looked at the money clock. All right, the like I call them flash patterns. All right, but I looked at money clock today, and if you haven't done that, go take a look at the money clock. So we'll do that real quick. All right, Tom's option tools. Click in, get in, log in, go to the money clock. All right, we got the 4-hour clock up now for you. All right, take a look at SPY. Look at DIA, QQQ, the rest of them, and you'll see, you know, that they all have these afternoon patterns that are going on. That, you know, 130-ish, and this is that 7-day look back, greater than or equal to, oh.
Tom, do you want the screen in view? Because right now we're seeing the
screen in view.
Well, let me click that button back again. And
you know what? Let's just get rid of my camera. How's that?
Okay, there you go.
All right. So anyway, I'm looking at patterns across different ETFs, and they all say short until about 2:30. So anyway, long story short, I'm looking at this. I'm thinking this is a great area to get short if we come below the opening hour. And we came down, we came close, we bounced off, we came down 247.79. So I've got 247.78 on my radar. So here's what I did. I'm gonna do this quick because it might happen, you know, here in the next minute or two. I want to make sure I get this in and show you guys this before we go any farther. So let's. And I'm watching bonds go up. I'm watching oil go down, and I'm seeing all these things that are telling me the market's about to drop again. So anyway, let's go to the order screen. So I'm over here. I'm going to place the trade right now. So SPY. All right, I'm going to do puts. They're not cheap, guys. They're expensive right now. But the puts, and I'm looking at the 248 puts. All right, so let's buy to open. I'm going to do 3 of them because I put a couple of them on already. So so what I'm doing is I'm doing a market order, and the market order is going to be an advanced order. This time I'm not going to do it by time. I want to do it by price. So in this case, let's go back. 247.78. That's 1 penny below 79. 247.78. So I want to make sure that I X this out because I want the S&P to decrease to 247.78. And I want that to happen between now and no later than 2 p.m. Because after 2 p.m. it's getting, I want to be out of this by 2:30. So I'm going to set the trigger. All right. There we go. Going to buy the 248 puts if we decrease to 247.78 over the next 50 minutes. Let's preview that. It's going to say 0 because it's a market order contingent on the price going down. There we go. All right. So if I get the dings, then we know something happened. All right. So here we go. We're at 250 now. I mean, we might not go down there, but we may. We're going to see. We're going to see where this market ends up wanting to take us. All right. We will see. All right. So now that I got that out of the way, now I can kind of slow down a little bit and work here with you. All right. We hit 7% limit. Oil market's crashing again. Oil dropped again below $30 a barrel. You guys know I'm short oil. I'm actually short now a combination of put spreads, ratio put spreads, and even I got assigned. I got a short assignment on Friday. When President Trump gave his speech at 3:30, right before 4 o'clock, he goes, "Oh yeah, and the strategic oil reserves, we're going to be filling that to the tippy top." You guys remember him saying that? And when he said that, we'll get a good price too. He said that, and all of a sudden, my in the money puts became out of the money puts. But right at the last minute of the day, they dropped down below 7, so I ended up getting short assigned. That's okay. I was happy to take the short assignment and ride that into today. So that's kind of where I am right now. All right. Short-term traders, I think the only possible opportunities in the market are ETFs. And that's kind of what I'm seeing too. So, if we go back and I'm going to spend probably the majority of the rest of my, other than concerns, we got concerns coming into this market right now, guys, and they're actually more than just the stock market. All right. So let's talk about concerns today. Today, my concern is that this is going to continue to go back down, and that we are going to get there's going to be some margin calls. Some folks are going to get margin calls. In fact, I think it happened in USO today too, or it'll happen in USO today too, but margin calls are coming. These will be calls on folks that rode into this weekend and you got long Friday afternoon when the market went up. I didn't get short either. I wish I did. I wish I would have got short, but I didn't. It's okay. I did get short Sunday because the market, as far as I'm concerned, the Fed showed their hand and did everything they could for the short term, and the market still didn't continue higher over the weekend. So that's why I got short Sunday night. How did I get short?
Tom, do you have the info for that SPY trade again? Mark's asking if you can show it again.
248 puts that expire today. Not a recommendation. Thank you.
Thank you.
So, and I'm not in it either. Let's make that sure. Let's make sure we know that too. All right. Not in it yet. Not in it. And the reason I'm not in it is because we haven't gone below 247.79. I don't want. And how interesting is this? Had I got into it right now, or at the beginning of this conversation, when we were around 248.50. Right now, I'd be 2 points, almost 248.50, 249, 250. Yeah, I'd be over 2 points in the red right now, less the option volatility. So I only want to get in it if we drop below that green line, because then I believe that's a psychology has changed, and it already looks like it wants to change in the bond market, and it looks like oil has been dropping off steadily since its lows that happened in the 5s this morning. All right, so let's talk about what happened today that is giving me cause for concern for margin. All right, so I'm going to take this SPY for a moment, and I want to change this to dash ES. All right, dash ES is this is the E-mini S&P futures contract. Now, while I will never teach you how to trade futures in here, because I won't, all right, it's a risky proposition. Trade that at your own risk. But what I will do is I'll tell you that I like looking at this for charting, because you can look at the 24-hour day markets 5 days a week. All right. So if you notice here, we've got some lines that happen. This line right here was the 5% up move, which is a limit. That's a limit price. We also had some 5% or 7% down moves that happened. Thursday we had one that happened, And of course, today, here's what happened last night. Last night, this is the open at 6 o'clock, right? This is me. I didn't get filled here. Wish I did. I got filled down in here. But then we dropped to here and we went sideways. For the rest of the night, we didn't trade back up, not once. So here's 4 a.m., 5, 6, 7, 8, 9, and then the market opens and we drop down 7%. And we sat there for 15 minutes. And then after that, the market opened again. And within 1 minute, we traded all the way down to 23.50. I thought we were going to hit the 13% lock. That's where I thought we were going. Didn't happen. All right. So from there, what happened? We started to create a bottom. And we started moving off that bottom. Now, this is the 5-minute bar. You can see what happened. We actually hit the top end of the range on the, not on the E-mini, but on the SPY. The E-mini is still trading in between its high and its low for the first hour of the day. So it is not traded above that. Look at those bonds. Somebody's buying bonds. So that's what I look at when I'm trying to get a gauge on the way things are going as of Sunday night. But Saturday and Sunday afternoon, weekend Wall Street's a great site to go look at. It's not perfect, but it's been pretty spot on since. All right, so if you take a look at what's happening in terms of stocks, bonds, currencies, and commodities, here's where we are right now. All right, we rocketed up, and by about 11:20, 11:25, we hit the highs for the day, which was 256.78. We've been since creating a series of higher lows and higher highs, and if this high is in, we should, the next move down, and it's gonna be interesting to see if it hits it before 2 o'clock, and I think it should. That next move down should eclipse the 1 hour high we have. All right. So if that happens, where do we go? And no, that's the question. That's the $1 million question. And we'll see what that ends up happening. We'll come back to that. Bonds were on the negative, but after, since lunchtime, since the end of lunch, we've moved back up into the area that's in between the first hour high and first hour low, and have been steadily moving higher. And it looks like we're likely to eclipse the highs and go back up into the green area, which we haven't hit. We've not come up to the daily highs yet, although it's looking like that's likely to happen here very soon. UUP, this is the double dollar index, down 3.13% today. This is a daily chart. Let's go to the 5-minute and see what I'm talking about here. Here's your 5-minute bar. This was after hours. Here we are today. This is the lockup. This is when the lock came out. We actually opened down here on the lock at 26.33 and moved higher, but are still down 3.13% as of right now. And again, I've got to go ahead and I'm going to go ahead and put my opening range in here, which I'm going to do right now, so we can see that. And there's that opening range, and we haven't come above or below it since the first hour today. USO. This was surprising to me. I didn't expect this thing to drop this hard this fast, but it did. We're down 12% on oil right now. Gasoline is down 20%. You'll see that picking up at the pumps real soon. But again, if I want to come in and create that risk on, risk off, I'm going to do that right now. And you can see here that we have touched that high on oil for the afternoon, but look where we were. Okay, 582. When did that happen? That happened right after the lockup. We actually opened, dropped down to 582, and then ran all the way back up to the high, which was 637. And we've been sitting in this range ever since. Came close to getting above the 638 area, but has been falling off since. All right. Okay. Everything here is as far as the afternoon goes. The bonds definitely are wanting to tell us that the stock market's bearish. Everything else is really kind of telling us, we're going to be trading in a range. Stock market is down 7.6% today, and yet it's on the high side of the day. That margin calls and every other thing I'm looking at is telling me that we could see another sell-off this afternoon. Again, time will tell. We'll see what ends up happening. All right, so if I were to move forward after today, take a look at what possibly could happen this week. All right, so I'm going to take a look at some comments real quick as I'm kind of moving around here. Have I ever experienced anything like this before? 1987, and I had a margin call that I couldn't meet. I'm happy to say I'm actually up on today. My overall account is higher, and that is because of the things that I've been doing in the last couple weeks to protect myself and to start getting short this market. And I started last week with oil, with a lot of bearishness in oil, and that has spilled over to be getting bearish in this market now. Yeah, I mean, have I ever seen anything like this? No. I mean, the last time I did, I was 22 years old, 23, 20, 22. 22. I was literally a trader for 1 year. I didn't have the experience to go through it last time. I hope I do this time. Wild ride, hold on. Yeah. Don't stop till you get enough. Happy to see me healthy and happy. Yeah, me too. I mean, guys, this has kind of gone beyond my ideas of protecting myself in the financial markets. I mean, this is, I'm married to, I'm Italian. I'm kind of a mutt. I'm a mix of a lot of things. All right. That's thanks to my German mother and my Italian father. But my wife is full on Sicilian. And, if I don't know about the Italians I'm talking to now, but this Italian family has 3 refrigerators and an additional freezer. That's normal for us, right? These refrigerators and freezers are so full, I'm concerned that we're going to start getting the ice on, because of the circulation. That's the Italian family I live in. So we're already prepared. I laugh to people and I say, my wife's been preparing for this for her whole life. She just doesn't know it. But food, yes, crazy. We are prepared. Very new territory. You're right. And so, it's amazing. Mark ran the Dean Winter Data Center back in 1987. Wow, that's amazing. And so, we've got a lot coming, and we got a lot of opportunities coming, but we got to get through some of this minutia right now. And I said it before, guys, and if I were to kind of bring it up again with you, risk less, look at what's going up in a down market, and that includes puts and put spreads, and exploit volatility. And that's the 3 things that I've been preaching now for the better part of a month. All right, so margin calls today. Who's hearing about the possible lockdown on with the country? I've gotten sources, more than one reliable source. And again, I don't know whether this is rumor or stuff's getting passed around that shouldn't be, but some of the things that are making sense. All right, Starbucks, for instance, you can only go in to get to-go orders. You can't congregate in Starbucks anymore. They took all the chairs out. So places like that. Restaurants are going to be, fast food restaurants are going to be drive-through only. So a lot of those quarter pounders, you're going to be in line for those now. All right. You've got, I imagine the mall, the malls, and we got a really nice one here in Sarasota. These are going to be out of business. They're going to be totally empty, if you can even get in them by the end of the week, I think. But here's what I'm hearing. All right. Let me grab my phone. I mean, I am getting literally getting inundated with. I'm getting inundated with text messages. I mean, even now I get this stuff. Let me just reply to this. Whew. All right. So anyway, let me find the one that I had. I got a couple of them that say that that within the next 48 to 72 hours, that that the White House, Congress, the government is going to act on something called the Stafford Act, which means that we're basically going into USA is going into lockdown mode. That the National Guard's being deployed. That and that would be for rioters and looting. That there's a lot of potential things that are going to happen, including a 2-week holiday, which would mean the stock market would be closed during this period, and banks. And so, you know, the other thing was get 2 weeks of food, get this. I mean, this is what I'm seeing, and I'm hearing it from more than one reliable source. Now, don't take my word for this first, okay? But a lot of states, a lot of state governors are imposing their own rules right now. All right. Ron's just let me know, guys. Let me know what you've heard, because I'm gonna let everyone know this. All right. And again, this is things that we're hearing. I can't stress to you enough that this is not. I don't know if this is fact. This is just things that we're hearing. All right. I'm gonna take. Oops. Took the wrong screen off. I hit the microphone instead of the screen. There, is that better? You guys can see, now you can see my screen.
We can see you.
All right, so New Jersey's imposed a domestic travel ban. So you're not allowed to be driving after 11 p.m. or before 5 p.m. in the state of New Jersey. Or 5 a.m. No, yeah, 5 a.m., not 5 p.m. That would be a tough one. This stuff's coming. Maryland, by the way, closing up all bars, all restaurants, anything where people where more than a handful of people can congregate together. Only food, grocery stores are going to be open, and delivery services for food, they're saying will stay in effect. I know a lot of people said, when I asked some of my friends, I said, "Do you have enough food?" They go, "Yeah, I got an Amazon ordered today." I said, "Today? You waited until today to order food?" "Yeah, well, it says it's coming." I went, "Well, I've had Amazon orders that said they were coming and they never showed up." All right. So I said, I think it might be best if you get in your car while you still can and go out and grab something if you believe that this is going to get worse. What else do we got here? McDonald's. McDonald's only selling takeaway. Bernard, you don't live here in the U.S., do you?
Yeah, he's in Belgium.
I know, because I've heard because in New Zealand they say takeaway. They don't say to go. Takeaway. All right. CNBC said it's a hoax. I did hear that too, that it's a hoax. My wife mentioned that to me. She says it's a hoax. And you know, I think that what you're going to hear is you're going to hear more and more, perhaps states coming out and saying this is closing, that's closing. What I will say is this: if this market drops and gets down to, if we get a lockdown to 20%, we go lock limit down at 20%, then I think the chances of that go high. That's what I think. New Jersey's got a curfew at 8 o'clock. Is that right? 8 p.m.? Yeah, they are worried about looting. And I do think and so, you know, kind of the things that have been happening, and I don't know if I've spent enough time talking to you guys about this, because I've been talking about this a lot, but you know, we're having a run on the food stores right now. What do you think is going to happen next? All right, what's going to happen next? If this actually, if we seeing more and more closures, what do you think's happening? I guarantee it is happening in New Jersey and Maryland right now. Is that now the ATM machines are going to be hit, and people are going to start withdrawing cash. So it's going to be a run on the banks for cash, and there's plenty of liquidity. Okay, apparently there's plenty of liquidity, and I'm still seeing trucks showing up at the back of food stores, so they're replenishing. So it's not like we have an issue with the supply chain, but if the entire country all of a sudden starts hearing from the 6 o'clock news, the 11 o'clock news, that we're going into lockdown mode, demand will outpace supply. It's just going to happen. banks are going to happen. You know, you're going to see some issues with banks. You know, I mean, utilities. I don't, you know, I don't see electricity going off, but you don't know. You know, so I mean, I got an outdoor grill and I got those little fire, you know, the little fire things. So guess what? All of those were empty this weekend. It's because we used them. So I thought, you know what? I need to fill these up for one reason or another. I typically only use them during the winter time because during the summertime, you know, you don't need those little fire things, those little heaters. But I filled them up anyway, just in case I wouldn't be using them for heaters. I'd be using them for the grill. So these are just, you know, little things. Trump administration tries an interstate travel ban. Lawyers are already working on legal action to stop it on constitutional grounds. This is, again, these are text messages that I'm reading just from you. If the market closes for 2 weeks, what happens to outstanding options that have expiration dates while being closed? That's a good question that I don't know the answer to. Okay, that's a great question that I don't know the answer to. I would have to say, and this is just an expert opinion, if it's out of the money, it expires worthless. If it's in the money, it's going to get assigned. And so that's what I'm thinking, guys. So just putting it out there to you. So, oh, did I miss a ding? We're at 247.28 now on SPY. Did I miss the ding? Oh yeah, I'm filled. All right, so we're moving. And I'm
people are going to ask what price, Tom?
247.48. Oh, I got filled at my puts to 398. Boy, that's terrible. That's what market prices will do for you. 398. Let's put it up on the board. You guys can see my screen, kind of. So I'm going to put, wow, TLT on the move, up almost 6% now. So here we go. SPY, and I'm using Thinkorswim. SPY, let's see, year is 20, the month is 03. This is the 13. That's the expiration date, or today's expiration date. This is P for put, 248. What? I must have put something in wrong. All right, let's try it again. 20? Okay. Start over again. .SPY. 20 is the year, 03 is the month, 13 is the day, P for put, 248. 2003, 13, P248. That's the weirdest thing I've ever seen. Okay, you know what? Better than that.
It's the 16th, they're saying.
Oh, it's the 16th. Thank you, Jay. It is the 16th. I'm losing my mind. All right, 408. The highest that they were at, it was 12. I don't see us getting to 12 in the next hour, but who knows? I've seen so much. I can't say, you know, I can't say one way or another what's going to happen. We'll just have to wait and see. And by the way, let me tell you how I'm going to get out of this trade right now before we get going. I'm either going to do a limit order, or if this thing gets deep, if it gets dirty down here by the end of the day, I will buy the S&P spiders against that. Let that assign as short to cover my long. And the reason why I would do that is if the bid and offer gets to be really wide. Okay? Does everybody understand that? Is that as puts go down, those puts go in the money. If I let them assign, they become short stock. Now, maybe I want to let them become short stock. I don't know yet. Let's just see what the rest of the day gives us, and we'll see what ends up happening. All right. So let's move along here. Yeah, I see everybody says, "Wow, 328. Good for you, Jeannie." 362. Wow. See, some of you guys are in there. It should be 320. Yeah, 328. Did I really get filled that bad? 398, 398, 398, 391. Okay, so
Was it the 320 strike?
no, it was the
No.
248 puts.
There we go.
248 puts. Yeah, the at the money puts. Okay,
Yep.
so anyway, let's continue. 320. Wow. Yeah, Jeannie got the fill of the day.
She said she used the money calendar or the money clock parameters and got in at 12:30.
Okay, she looked at a different. Yeah, she looked. And you know what, guys, you can do that. You can massage those and look at them. The reason I went with what I went with is because I wanted to get into this move right here. All right, that down move. I wanted to get into that, and I thought, there's my line, my demarcation line. That's where I want to be in at. So I wanted to be hopping on the southbound train when it was going south, not north. So I paid a little more. All right. Spreads are vicious right now. They are. And Brendan, that's why what I'm thinking about doing is if this does go down, this is only going to get worse. All right. Right now it's 23 cents wide, 19 cents wide. That's nothing compared to what we're seeing in stocks. But if this $4 becomes 8 or 9 or 10 or whatever it becomes, I might elect to buy the stock against the holdings I have here. Now, I might also just say, let's just get out for a double. All right. So for me, that's going to be probably about 8. You know what? Let's just put that in just for the heck of it. So to do that, oh, now again, did you hear that, Jay? Did you hear the ding?
Loud and clear.
Man, that was late because I got nothing else out there that I'm trading right now. It took that long for the ding to come. That just tells you how behind the 8 ball a lot of these order executions are. All right, so I'm going to go back to my all-in-one ticket. And what I can do is I can either do that or I can go to order status. And I can take the trade that I have, 248s. Okay, so I'm just going to click on trade.
What expiration was this, Tom? A Wednesday option or a today option?
Today option.
There you go.
So I got 5 of these. So I'm just going to sell the close 5. And I'm going to put the order in as a limit. And I'm going to put the limit order in at 8 points. Just, you know, I mean, I don't think it's going to get there, but like I said, I've seen worse happen. All right, so that's out there. Where was I going this week, this month? You know, again, if that potential lockdown thing happens, and we're already kind of getting different states coming out saying, you know, basically doing curfews and such. If that continues, and we do get to some sort of a national lockdown, I would expect pullbacks to occur that eclipse a lot of what's going on here now. So, and what I'm thinking about is pullbacks that go back to President Trump's being voted in office. Back then, the Dow was trading right around just below 18,000. The S&P was around 2,000. The NASDAQ was somewhere around 5,000. And so think about those numbers, and you could put together, you know, kind of an insurance plan if that were to happen. And so that's an idea too. Okay. You know, when would something like that happen? I mean, if they're planning, if this is at all possible, and then, like you said, you know, right now news says it's a hoax. It's a hoax right now until it's not a hoax. And I'm not saying this is going to happen. I'm just saying perhaps we need to figure out how to prepare for this and be able to do it on the cheap. And we could talk about that here in a little bit. But that's, you know, today is going to be hedge funds. Who needs to be worried? Hedge funds need to be worried today, right? Next week it could be, you know, us as the country, us as traders, maybe taking some time off if that ends up happening. If they close the markets down and give everybody a sigh of relief, because I do believe that this isn't anything the stock market can solve. The only way this gets solved is that everybody stays home for a little while, and we start seeing that peak level, that peak number drop. I mean, it's already been proven to work in China, and I'm not one to believe everything comes out of China, but China has a different regime there where they almost force people to stay in areas. They force people to stay in areas, and they've kind of shown that their numbers have gone down. Now, Singapore's done it a little bit more diplomatically, and their numbers have dropped too. So they've shown that it can work. And I think we are, if we don't do that, we're the next Italy. That's what I believe, right? Because we didn't contain this thing soon enough. It just, people just were coming in all areas. No reason to blame anybody at this point. It's just, how do you take care of this now? And I think that this potential self-quarantining thing might take another level up. All right. So as I'm continuing to press on here, just kind of look at some ideas. You know, I mean, we talk about these, these different strategies and how we want to try to attempt to follow the markets, and the best thing I can do is go right back to what we talked about: risking less, looking at what's going up in a down market, exploiting volatility. So let's go forward and let's think about how we can protect ourselves for the rest of the month. And that would be going back to the tools. And from here, and this would go alongside any darknet strategies that come up or any money counter strategies that come up, is protect yourself now in case you're wrong, not just by stop losses, but by potentially, if you have an account that has stock in it. Who's holding stock in here right now? Last week I cleared out of almost everything. But if you're still holding stock here right now, then you might be saying to yourself, well, what do I need to do, to protect myself? And that would be something as simple as creating some sort of cheap protection. Now, the way that I do it is in the SPY, because it is one of the most liquid traded instruments out there. But you can't go down just 10%. And by the way, this is March 20th, March 27th. We could go to the 31st, all right? That's 2 weeks out. That's over 2 weeks out from where we are right now. How much of the market's fallen so far in the last 2 weeks? Let's go look and see. All right, so let's take a look at this side. What I want to do here is let's type in SPY once again, but I want to look at the daily chart. So I'm going to have the daily chart on the right-hand side. And you can see what's happening in the month of March. Here's February. This is when we first realized we had a little bit of a problem, and I actually went to 75% cash here. All right. When we did this last week, I started unloading out the rest of my positions. So I missed a lot of this the last few days. Especially, I looked at Friday, I'm like, really? And then today just kind of came back into place, and I'm like, all right, I'm on the right side of this. Friday just gave me a little hiccup. So what I'm saying is that we went from 1, 2, 3, 4, 5, 6, 7 trading days from 300 down to 240, 247. We could be down to 200 like that, right? Which is where I believe the floor would be on SPY. So let's
Tom, I'm getting multiple questions about if we're supposed to be seeing you and your screens at the same time, or just your screens.
Yeah, me and my screens. I mean, I can, I can pull the screen. Let's just pull the screen on. How's that? So at this point, what I'm going to do is I'm going to look at some options. And from 250 down to 200, or 240 down to 200 that's 20%. So we want to be looking at least 20%. I'm going to actually set this to 25%. And I'm going to look at March 31st. I'm going to click on update. Now, premiums are going to get a lot more expensive here. But if you're going to utilize, for instance, 200 as a selling point, and I'm looking at puts. Here's my puts on the right-hand side. So let's put a -1 out there. This is going to be the put I'm going to sell. How high up do I need to go? All right, so if I'm going to get $3.89 or $3.86, depending on how you look at this, on the 200s, what are the 210s going for? $5.55. Let's take a look and see what kind of risk to reward ratio we're going to get on that. That's a 500%er right there. But we have to go down a lot lower than we are right now to see that, a lot lower. Okay, we're talking 210. And we're at where are we at right now? 247.78. I'm right back where I got short. So if we do that, again,
people are typing in that Canada's closing its borders to non-citizens here, Tom.
Canada, huh? All right. When did that come off the wire? Just now?
People are typing it in within the last 3 to 5 minutes here.
Yeah. Okay. We'll thank you very much. Keep the information flowing, guys. So here we go. You know, and I don't have anything on to distract me because I want to focus on you. So you know, as we're moving along here, and I'm just kind of keeping my eyes on what's going on. So 247. So we really do have about 25% before we get to 200. And so I want you to think about that. And you look at the fact that this is a spread that costs $1.66. Let's look at another one. You know, if I want to put myself in the $500 or less camp, that's kind of the way I look at these things. And then I'll just tack on how many contracts that I'm interested in. But what if we changed? So I could take a look at this and say, all right, 389, 4, 5, 6, 7, 8. So if I go up to the 880 area, I can get myself all the way to really about the 220, maybe to 225, 224, 225 puts. Now I've got something. I got a nice wide spread. Something's got a better break even to it. What's this going to cost me? $510. That has now it's only a 390% return, but I'm closer to where the market is at 225. All right. That's really what I wanted to show you. Now, we could go even one step farther. One step farther would be, how about butterflying this strategy? All right, well, how would you do that? Well, what you would do is you could look at it potentially a 1-3-2 modified butterfly. And that means taking that 25-point strategy we have here. So if we sell the 225 once, now we could do the 1-2-1. Let's just look at the 200, and then what I need to do is I need to look at the 175s. So now it means
Steven's asking why the March 31st expiration.
It's liquid. It's also I'm looking at you can look at any expiration you want. They're all out here. I chose March because I think in 2 weeks we're going to have a completely different situation here in the States than today. And I think if any change is going to happen, and you're seeing changing happening by the minute, guys. So 2.5 weeks is plenty of time for me to you know, for the markets to get down there. Remember, the bear takes the stairs, or the bear takes the elevator, the bull takes the stairs. So the elevator could be a, you know, express one into the 200s. What about a butterfly? So butterfly, if we look at for instance, we want to make the strike limit to 50% because you got to have something on the buy side. Once I do that, that opens up all these other strikes right here. So again, if I were going to be short the long the 225s for March 31st, short the 200s, not sure it changed. It did change. Let's go to 999. 999 shows every strike that's out there. We might not have enough strikes. Yeah, there's nothing below the 185s. Imagine that. Okay. How do you set this up then? Well, 185 has to become a buy. And so if 185 becomes a buy, now I've got to set my strikes a little differently. If I was at 225, 225 and 185, what's the middle? All right. This is one where I actually have to go in and do a little calculations. 225 plus 185 divided by 2. 225 plus 185 divided by 2. I'm getting 317.50, and that makes no sense at all. Am I doing that correctly?
I have a couple of people typing in 205.
That's, well, 205. Oh, 195. Okay, so 180. So if we do it this way,
4 votes for 205.
You've got 1, 2. All right. So look at the distance between these. That's what I want to do. So 225 minus 185, 40. So what we're looking at is we want to go 20 points down. So really where you want to be is, like I said, 205. So 205, let's do a minus 2. So you've got a plus 1, minus 2, plus 1. I see all these single dollars are what visually got me off track. Now we're correct. So now we got a butterfly. Cost $187. It can make as much as $813. That's just a simple 1, 2, 1. That's actually a pretty good reward the risk strategy right there, guys. And if you believe it would happen in 2 weeks instead of 3, if we're counting this as the first week, let's just take a look at that graph. We'll do the same thing. We're going to go to the March 27th. Let's update. Let's do it one more time. In this case, you got many more strikes down, but let's just do it the way we have the first one. So we're going to buy the 225 puts one time. Going to sell the 205 puts 2 times. Going to buy the 185 put 1 time. And what we have is a strategy that is not that much different. 188 risk to make 1812. These are both almost 10 to 1s. Now, what's the problem with these trades? What's the problem with the trade, Jay?
I was about to ask you what Brendan was asking. Is there a risk that the move will happen sooner than expected?
That's part of the problem. There's always a risk the move can happen sooner than expected. And if the move happens sooner than expected, all you can rely on are the red line, the blue line, and the green line. All right. We go to 205, you got to take the trade off, because all of a sudden we're at the top of the hill. The only place to go is down. So 205 could be a nice area there, but it's important.
If it holds there.
Yeah.
And if it holds there, theta decay works for us, so we're cool with that.
Right.
Yeah, but the risk is volatility.
In something like this, theta decay could take all the way up until the last day, with volatility the way it is. All right. But I'm just showing you some ideas that you might want to, look at as we're moving forward. Jay, you have anything to share with us on Darknet or Money Calendar?
It'll be a short session, but I wanted to reiterate something about the weekly money that we talked about. The weekly money will be a helpful discussion because of one of the questions that have come up on the Q&A boards was kind of like a strategy to use for a bear market. And then something to consider for Money Calendar based off what you've been teaching about trying to find stuff with a that's either up in a bear market or holding up relatively well in a bear market. So let's show a couple of things if you don't mind. It won't be a very long session on my part.
You got it.
Okay, so I think you have the weekly money in view on your screen.
I do.
Okay, and so to reiterate, folks, if I didn't make it clear, I want to make it clear now. Confirmed with John, programmer today. The weekly money, if you're using it on Monday, as it shows here, the dot is in the circle for Monday. We're going to look for a bullish opportunity on Monday with a this Friday expiration. And we'll use bullish, best, or good, both of them. Okay. Good gets you more frequent trades, but best is the better return of trades. But if you want to get a combination of both, click the bullish, best, or good. So you'd be looking for a bullish opportunity here today with a this Friday expiration. As for what works in a bear market, Tuesday. Weekly money for Tuesday, you look for a bearish opportunity, and you would click bearish, best, or good for Tuesday, and then run your search on whatever list that you want, S&P 500 or penny and weekly, okay? And then do your search. But your expiration for the bearish opportunity on Tuesday is a following Friday expiration, but you look to get out on the following Monday. So if you're here bearish on Tuesday, looking to get out the following Monday, so you want that following Friday's expiration. And yeah, there's weeklies like Mondays and Tuesdays. Those haven't been used in the back test for this, whereas the Fridays, weeklies, and the Friday standard options expirations have been used and such. So you can try those if you want, but those haven't been used in the back test, okay? So that's the clarification of the weekly money. Monday, bullish for this Friday expiration. Tuesday, bearish for the following Friday expiration, but your exit is a time expiration of the following Monday, okay? And that's really all I wanted to look at there. We aren't on Tuesday, so we won't look for a bearish opportunity for Tuesday here. Not too hyped on looking for anything bearish on this short of a time frame for a weekly, so I will move on. Darknet. Let's run this search again because this was done before we started our session. So let's go search and see what we get here. Call option trades, Johnson & Johnson, #1, but it's an A. Again, folks, I like to entertain B's every once in a while, and R. The A's are the aggressive, meaning it's moved down 3 times now. Okay, there was your bullish, there's your reiterated bullish signal, and now we're chasing a falling knife, it seems, by going after these A's. You can take the perspective that, hey, this could be the bottom we're looking for, but I don't know that we want to get into the game of trying to predict tops and bottoms. That seems like a surefire way to, part with your capital, if you will. So let's refresh this and look at the list again. And the other thing is, look at the slippage. We want a less than 1 slippage, and almost everything is over that. Okay, we have Medtronic and Oracle. But again, if you guys want to do A's and you have a history with the A's, aggressive signals, let us know. I don't particularly do those. Here's one thing that I did like on Oracle. The fact that they announced earnings, beat their earnings expectations, and they incorporated or announced a $15 billion share buyback program. So I'm going to talk with Mike on this and collaborate with Tom as well. During earnings seasons, if you get a positive earnings and a company announces share buybacks, that seems to work out pretty well for future upward pricing. Now, this isn't something that you take into account prior to the earnings, because not a lot of companies will announce a share buyback program prior to their earnings. It usually comes out on their conference calls after they've already reported a good quarter and good revenue and good earnings, that they also say, hey, we're initiating a share buyback program. And outside of this funky market, that worked pretty well for an Oracle as it popped up amidst a down market. And even today, it was trading up near yesterday's close. After it's gapped down 4.5 points, it still ran up almost to the high of yesterday and has since pulled back with the rest of the markets and such. So that would have been an interesting to entertain if you still believe in the prospects of that share buyback kind of outweighing what's going on in the overall macro picture. There's a consideration for you, but we're not recommending anything, and we're not going to pursue it either. Okay, so Tom, I don't really see anything that I feel good about in the darknet signals as well here, with those slippage numbers so high, the price of the options contracts over 5. I mean, you can look to try to initiate a spread trade out there, but as we've seen, as soon as we look for an opportunity like this, you risk the slippage or volatility. I mean, the pricing is just so ungodly to try to overcome. Even on these day trades that you're doing with Tom, those are working, but it's an even challenging environment there because of that slippage being so high, and we're seeing it right here in the darknet numbers too.
One thing you could show everyone is, why don't you show the money calendar ETFs and take a look.
We're going to money calendar now. Okay, I'll go to money calendar now. I have one for you to look at, and it's one that Tom and I talked about over the weekend. It's on Eli Lilly, Tom, and I'll show them that in just a minute. But here's a money calendar ETFs. Click on the money calendar drop down arrow there, click on ETFs, and there's your ETF schedule for March. By the way, folks, we do have data in there for April now. Miles, our programmer for the money calendar data, just got that in there today. So you have here all the information you need for the month of April. And look what's happening here at the end of April. Why do you suppose it's going back? Now, forget about what's going on with the reality of today's markets. We know we're in a bear market across the board, greater than 20% drop off the highs of the three major indices and such. But what's going on at the end of April and why it would start going into a bearish tone outside of what's going on now, but for this particular last week to week and a half? What's coming up after April? May. What's the typical thing to look out for when it comes to May in the markets? The sell and May go away factor and such. So Tom, this is going to be an interesting report, the sell and May go away report, because the markets have already sold and gone away, you know, from the peaks in February. You know, are we going to see bargain hunting and that sell and May not be as neutral to bearish as it has been in the past because of all the bargain shopping coming in? It's going to be interesting. What do you think? Yep, very much so. All right, so anyhow, April's in there, but back to this here on the ETFs. If we look at today, we had 11 bullish ETFs, 1 bearish ETF. If you double left click on the power meter, there's your positive power meters. Only 1, 2, 3, 4 of these had positive power meters, SPY being one of them. But you guys are already knowing what you're doing with the SPY with Tom here just a moment ago. SSO, I think that's an ultra short. HYG, EW, you can look these up. So anything else you want me to show them on the ETFs, Tom?
Nope.
Okay, so let's go to the view month. Let's go to the equities. And we'll go back to money calendar and the 16th. Here's what we're looking at. Power meter, double left click that twice to get the highest to the lowest positive power meter. One thing that we were looking at is, you know, how do we go through this list aside from the power meter, aside from the accuracy? What's one other thing that we can incorporate into this look on the money calendar candidates? And it's Tom's education and Tom's teaching that you look for stocks that are holding up or at, you know, going up in a bear market, showing positive relative strength. So I went and I looked and I said, well, let's use the high-low. So what do you do is on home, Tom's Tools, or anywhere that you have the stocks tab, you go stocks analysis, and you can click on the high-low. And what you're looking at here is a number of weeks. We're looking at stocks that are at their 52-week high or at their 52-week low, whichever one you want. So if we're looking for stocks on the penny and weekly list, or you can use any list that you want, but penny and weekly, and stocks with largest, highest close for the weeks chosen, 52 weeks, click on search. We can see stocks and their ranking, which, you know, here's the small cap bear ETF, TZA, at 100% high. Okay, it's almost like an inverse ETF, if you will. Markets go lower, this bear ETF goes higher. But we don't trade those. So I was looking through these, and Kroger was not on the money calendar list. Tiffany, not on the money calendar list. There's Eli Lilly. If you go to the symbols and click on that, put them in alphabetical order, what do you see? We have Lilly. Now we're loosening that 20 to 30 day trading range to, you know, get maybe we don't need quite the 20, we can take a handful less. Okay, handful is 5, so 15 to 20 to 30 days. So here's 15 days on Lilly, okay? And Lilly was at about 80% of the, well, it's now 68%, but as a close of market on Friday, it was like 81% of its 52-week high. So that's a, you know, stock holding up, you know, within 19-20% of its 52-week, its yearly high, and on the money calendar. So that was one we were going to consider, okay? And if you don't like the fact that here we are now at 2 o'clock, a little after 2 Eastern time, a couple of days left in this trade, and you're looking at the weekly money, I'm sorry, if you're looking at money calendar and you're looking at Lilly, and its data says, well, it's good for about a point move, but last year was 2.5 points. Off its lows, Lilly is up. It's down 3% net change on the day, but off of its even open price, I think Lilly opened at 131 and it's at 135. So it's up 4 points off its open price. And 4 points is already greater than that 2.5. So maybe you're thinking like, well, the move's pretty much over. What else can I do? Let's go to view month. Let's look at something for tomorrow. Is Lilly on the board for tomorrow? Okay. If the price move, the profit target, the 2.5 points from last year was already met today, maybe we look for a new trade scenario with Lilly. So if we go back to the month, click on the 17th, do we have something for Lilly? I'm clicking on the symbol again to alphabetize it, going back down to Lilly. And from a start date of tomorrow, we get 2 extra days on the date runs. Instead of a 15-day pattern, there's a 17-day run. So if you click on Lilly for tomorrow, and you're doing this at the close of market tonight, I'm not recommending this. I'm just saying, here's a way to use the tools and say, well, if you already think the move's already happened, this is why we advocate looking at this at the close of market. So that way we can look at a fresh start tomorrow and a fresh move of $1.50 on average, or this move from a start date of tomorrow out to the 17th, you know, we pick up another 54 cents on the move. So it's a $3.04 move. You can either look at a $1.50 move on average or say, hey, even if it just mirrors what it did last year at 3 points, is there an opportunity? So if we write down Lilly, what's the current price of Lilly? 134.09. Again, this is the educational part. I'm not saying do this trade. I'm not saying even paper trade it. You can if you'd like to, but this is how you would do that if you're going forward with this. So Lilly 134.09. You can write down a $1.50. That would be a 135.59 target. If you say, what if it mirrors last year's move of 3? You would have a 137.09 target. And the end date, April 8th, which means we would look at it April 17th. Now, there is an April 9th. It's not April 10th because of Good Friday. But again, like Tom was saying, you know, look at the third Friday of the month expirations. Those are the more liquid than the weeklies. So on April 17th expiration, we went to the options data table, typed in the symbol Lilly, clicked update. We are left click selecting April 17th. And if we go down here and look at 137.49, actually it's around 134 now. What does a 130, 135 look like? Let's buy the 130, sell the 135, click risk graph and take a look. Now these spreads, at the time that I was looking at them, are about a $1.40 apart. This one is 90 cents apart. That one's $1.80. 1% of 134 is $1.34. So we're there or a little bit above on one strike above that 1% slippage. But here's 273. Do you think you can work that spread for 250? If you got a $5 spread and you can get this for $2.50 and the stock goes above 135 and it's there at expiration, you're going to realize the full $5 offset by that 250 for a 100% gainer. But even right now, it's an 83%er. What's the concern, guys, outside of that slippage? You know, what's the market going to do into the close even today, let alone by April 17th expiration as such? But I still wanted to give you some education on how to navigate this software and find these setups, do the data and push the buttons. And if you want to go forward with this, you would just change the prices here on your entry to a price that would get you $11.50. Okay, so let's just call that 13. Whoop. Click risk graph to get that in there. Well, I set it for $1.50, but anyhow, set that for your $12.50 and you guys will be good to go. And I'm messing around with the numbers because I'm
Wow. Jay, we lost you, or at least I lost you. Yeah, I lost him too, Carla. Did you guys lose me, or can you still hear me? It's like the internet just went dead. Okay, there we go. You guys can hear me, but not Jay. Jay, if you could hear me, my suggestion is maybe leave and come back because we lost you, buddy. I guess they shut the signal down out there in Seattle. But come back into the room when you can. I'm going to take control of the presentation here real quick. So let me grab that. And that way, at least one of us can be seen and heard. There we go. All right. Look at this. The bond market's just ripping. I mean, Jay started talking, I think, probably around 2-ish or so, and the bond market's continued to rip higher. What's surprising me is the stock market hasn't fell off a cliff yet, based on what I'm seeing happening in bonds. So, when you see this move above here that happened at 125, if I were to take us back to 125, okay, yeah, that puts us at around 250. So that would make sense. So anybody that got, that got short or decided to get short on the S&P at the 250 level, definitely smart move, right? But the fact that we've jumped so much, so far, so fast here, especially this extension off this high that just happened here during this 5-minute time frame, we've gone up on nearly a full point, and we haven't dropped down into new afternoon lows. It's actually shocking to me. Let's take a look at a couple of other things here. So if we go, and UUP, we could take a look at it real quick, but it's not doing anything. I mean, see that? Just kind of snaking along. USO, now the oil markets, the actual oil trading pits close at 230. So there could be an idea where this could run down into 230. I mean, we started at 1 o'clock when we started on this webinar at 1. We were trading around 610 on 611 on USO, and we've gone down to 604, which may not sound like much, but I mean it's still a good bit. All right, GLD. This has just really been a tough one to follow. First of all, opened at 136, absolutely crazy number. All right, traded up to the low 140s, and now we're back down to where we just bounced off of 140 just on this 5-minute bar that we have here. All right, someone was asking me about the option trades we were looking at, and let me just see if I can find that question again real quick. There was a question about someone was asking me on the spider trade. Now I got so many people saying we lost Jay. I'm having trouble getting to the questions. Let's see. Let me back it up a little bit here and see if I can find it. Well, Tom showed a 331 put spread again, and okay, so let's see. Here's a 331 put spread right here. There's 3 of them. So this is let's see, butterfly put spread. There's the put spread. Now, granted, this was 20 minutes ago, so let me just update this and see if this has changed at all. So far, it hasn't on my screen, but we can take it a little bit farther. But it's showing right now $510, and that's to buy to 225 and sell to 200. But if we were to go look at that in an actual trade, let's go look and see what that would what the real-time bid and ask are. So SPY, and we'll look at a put spread, and we're going to be looking at the March 31st. Buying the 225s, selling the 2 double lots, 200s, 516 by 547. That's actually still not so bad. All right, so I mean, you got to pay a little bit more for it, but yeah, I mean, I look at both these numbers and I work myself from here because this isn't screaming down right now. You've got an ability to do a walk limit, All right, you could do a walk limit on this trade. So if you were to say, all right, you know what, I want to put in a couple contracts, and I'll throw 2 of them on there just to kind of show you how this would work. One of the things we could do is if you really wanted to get filled, but get filled at the best possible price. Now this is Charles Schwab, so it would be, you know, whoever you're utilizing, but you could use a walk limit price, and we could start. I could even start. Let's call it. I'll customize it, and I'm gonna start this thing at about 5 1/4. Hey, Jay's back, I think.
5 years, Tom. I apologize, everybody. I apologize, Tom. Thanks for picking me up on that.
No problem. All right, so I'm going to start at 5. These bids and offers are going up. That can only mean one thing. That can only mean one thing. Oh well, we're not down that much. I thought we were going to be down in the 244s. But if those spreads are going up, that's kind of telegraphing that the option markets might be ready to, or the stock market might be ready to start falling down finally. But let me go back and show you what I'm talking about here. So let's say that I want to go 525, but I don't want to pay more than 545 for this. And I'm going to do it in penny increments, and every 5 seconds I want it to change. That's how you can do it. You can preview it, and walk limit price must not be greater than or equal to the NBBO bid-ask spread. All right, so then that means I got to start, I guess, in the middle. Anyway, that's one way we could do it. In fact, I'm going to cancel. I'm just going to clear the order, and we'll try again. I mean, I kind of like this for 5, you know, that 510 that I liked, but I'll do 525. So this is a put spread again, and we'd be looking at the 31st, buying 225, selling 200. Now it's 556 is our price. I mean, it's still kind of moving around a little bit there. I mean, I look at it and I think, all right, so $550 would be a good 5.5. You know, I mean, I want to be right around that mid price, maybe a little bit above it. In this case, I'm going to be a little bit below it because maybe the market will move back and forth and it'll come to me. Right? That's the big thing. Right? So let's put a couple of those guys on the board, and I'll preview that. And I'll go ahead and place that order, and I'll stick that out there. It was filled that fast. How about that? Guys, when you get filled on something so fast, it makes you wonder what the bid offer actually was. The other thing I can do is look here. Okay, now this is coming down, which is kind of shocking too. That we're about to enter new lows for the afternoon. Let me just take a look and see what's going on with TLT, our friend, who's, oh yeah, just well, it's come off a little bit. You know, we went as far as 165. We've dropped down. We've come back down to 164. Now we're at 164.48. So this is all over the place. That's probably not going to be great for the stock market. And yes, we're now in new lows for the afternoon. All right, so let's go back to our trade again because I want to see this. Maybe I'm going to, you know what, I'm going to place another trade because I didn't, you know, one thing I like to do is trade small and trade often. And that's why I kind of limp in a little bit here. So let's do that put spread once again, or better yet, maybe I go in and I look at the 27th. So if I bought the 225s and I sold the 200s, what would it cost me in the 27th? On the 27th, it'd be 5 1/4. All right. Well, maybe I do the 230 and the 205. Okay, that's going to be 6. But you know what? These prices ain't exactly have been spot on. So maybe I do it for 5 1/2 and see if somebody is willing to put this trade on for me at 5 1/2 on the 27th. Okay, let's preview that and let's just stick it out there. All right. So back to the markets. Still kind of creating that lower high, lower low scenario. This trade, I really wanted to have it done by 2:30. So now this is the last thing that I want to teach you for the day, and that is, getting out of these things. And so what I'm going to look at now is I'm going to go back to the option price. So I'm going to put in here SPY once again, the 16th puts 248. You know what's funny? These haven't gone up that much at all. I mean, they're $4.31 right now. So, the thing I'm kind of watching is what's my bid and what's my offer as I'm getting down here to this low. I've got 8 minutes left on this pattern, and I really like this into the close, but the pattern tells me to get out of it in 8 minutes. So really all I can do is just kind of hang out. And so I thought what I'd do is just spend the last few minutes here with you, and we'll just kind of, what I'm going to do is as we get closer to the 8-minute time limit, I'm going to go ahead and create my closing price. So here's what first thing I need to do. I need to go out there and I need to get my orders, the ones that my order status. Now over here, I've got some open positions, and there it is. There's that one I want to sell. Look at this, 586 by 611. Really? Oh, that's the verticals that are open. No, what I want is the one that I'm trying to close. That S&P limit for 8. There it is right there. It's 441 by 458 right now. I don't see it going to 8 in 7 minutes. I mean, we can hang out there and wait on it, but I need to have this screen ready to roll. All right, so let's just see what we got going on. 245.45. I mean, at the slow burn that we're doing right now. All right. So if I look at this and I see where were we 5 minutes ago, and I were to kind of like look at drop. I mean, maybe into the high 240s. What is that going to do for me? If I get to $5, that might be the place to bring my limit down to 6. Look at the clock, couple minutes later, bring it down to 5. Look at the clock, couple minutes later. This is the things that go through my head when I'm not going to hit something, but I'm closer to the to getting out by what the time frame tells me to get out. So let's go ahead and let's hold this. We're going to wait another minute or so. All right, we're diving down into new lows. All right, what do you guys think about this stuff? All right, is this a good way to share the last few minutes of our time together? Just kind of watching and getting an idea when to exit a trade, because that's what we can do. All right, let's hang on. That's what Ben and Tiffany are saying. Let's hang on. All right, so we've got 245. I mean, honestly, if I saw this just absolute, everyone's leaving the exit door, I'm going to hang on to this thing, this $8 price here. The other thing I'd like to start seeing is I'd like to start seeing these bids and offers getting, like, look at the bid is 87, the ask is 88. That doesn't make sense at all. I mean, these things have been wide all day, and now we traded 78. This will tell you right here that the Thinkorswim platform, as good as a platform as it is requesting to send the data right now. All right, it's doing what's called a request to send on the data. If you really want to see, you go to, like, for instance, if I go to Schwab is going to show me tick data, tick by tick. And that's where I can see this thing kind of rolling up and down. But this is good enough right here. This is good enough because it's giving me an idea of where things are going into the final 5 minutes of this particular trade. It might be oil that's pushing this, which is an excellent reason to get out at around the 230 area. Let's add another window so I don't have to keep taking these things down. USO. And USO is at 607 right now, which is not, 604 was where we were. So this market right here is going to get a little crazy here at 230. And if actually, if we look at dash CL, let's look at the 1 minute chart on dash CL. So it's going to give you those next few minutes. You know what? I like my chart. We're going to go to style. I'll load up my risk on, risk off. There we go. There's our style. So what's been going on for the last hour or so with oil? It's come down from the $29 down, the low 29s to the mid 28s, back to 29.04. Again, it's going to be very interesting to see what oil does to the markets in the next few minutes. All right, we're down like the 3 minutes left on this trade now. So I'm looking at this number 434. This is what I'm going to do. I'm going to change this to $5 now because I don't see it going to 8. I don't really even see it going to 6 in the next few minutes. So now I'm going to change it over. So this is what I'm going to do. Come over here. There's my limit of 8. Let's modify that. Okay. It's 459 by 478. Let's change that to 5 right now. All right. Place that order. That ding meant all it meant is that it modified itself. It's still open. It still hasn't traded. All right, so that's still open. So there we go. I'll leave that right there. Let's pop on over and look again. All right, so it did come down a little bit lower. It made a lower low on this bar, but now it looks like it's attempting to run. Look what happened to oil. Oil's making a push to the downside. So it's now dropped almost 50 cents a barrel just in the last few minutes. Here we go. Final 2 minutes of this is not USO. This is the crude oil pits in New York. All right, this is the NYMEX. That's why you're gonna start seeing this rocketing back and forth a lot. All right, that's fine because what that's gonna do is that might rock this around a little bit and give us a half a chance here. All right, 2:28 p.m. Still at that at the levels we're seeing. And you know what? I could be totally wrong on this, and the oil could close, and this thing could drop from there. But that's not how we trade. You know, we follow a plan, and the plan that I'm following is when I see 230 hit. In fact, I would go in there and say to myself, you know what, just get out at 230. But when you see, again, when you see these bids and offers, and the bids and offers here are not bad. They're 20 cents wide. It's not the worst. That I've seen. So that might not be that big of a deal. In that case, let's go ahead and get the order changed once again, and we'll just get out of the market right at 4:30. So back to our order status. Again, here I was at 8. That was canceled. Now I changed it to 5. That's going to be modified. So can I modify this from a limit order to a market order? Well, about to find out. Yes, we can. All right. Preview the order. It's 229. It's almost 230. So 229. Let's take one more look. Yeah, what's kind of making, yeah, there's your rally happening now. So let's go ahead and let's preview this and let's get out of this trade. There we go. Filled at 370. So I ended up losing a good 30 cents on that trade. 20 to 30 cents, depending on where I was filled on my 5. But I'm out. Didn't burn me well at all. Imagine this, guys, that I had a 30 cent move in a market that is just literally all over the place. Now, how did I lose 30 cents when we got in at 247.79 and we got out at 246 something? Well, because time value came at me, because this trade's been on for the better part of an hour and a half, and so that time was ending very quickly. All right, so let's roll on back over. I talked about kind of when not to trade by looking at the bid-ask spreads. We talked about the fact that the ETF market is, in a day like today, if you're going to trade anything, that's what we're looking at trading at, is in the ETF market. You know, today didn't turn. I mean, this afternoon didn't turn out like I expected it to, but that's okay because I mean, you know, I look at the grand scheme of things. You win a loser, you win a little, you lose a little, you move on, you put together trades, and you know, the plan is that you're constantly pushing yourself, you know, closer and closer to the goal line, which is, you know, continued profits. So, you know, guys, with everything we do, and you know this, we're always talking about these three things: spotting rules-based opportunities, creating that low-risk, high-probability trade, and then planning that trade from start to finish. All right, and that means at this point that I am finished for today. So I want to thank all of you for hanging out with me here for the last hour and a half as we did the over-the-shoulder look. And I think this time, Jay, we really did the over-the-shoulder look. In fact, too much.
Literally and figuratively, yes.
Because couldn't see some of my screen when I was over the shoulder. So again, thanks for partnering up with me, Jay, and you know, feeding me questions and etc. And also taking over for your time and your opportunities that you are presenting, as you have been doing for the last 7 weeks now since we started this. So guys, thank you very much. Appreciate it. And we will be back next Monday. And don't be surprised if I start adding a few more days on this thing. So the only way we won't be back next Monday is if the worst ends up happening and you know, we end up taking a few days off. But you'll hear from me before then. All right. So again, have a great rest of your day. Be safe. You know, trade small, trade often, and I will have a recording out to you very shortly. Thanks again, and we'll see you soon. Oh, there was another order got filled. See you guys. Bye now.